Welcome back to Charged Alpha. I'm Hudson Thomas, joined as always by my co-host Lana Chen. In this segment, we're zooming out from the quarterly noise for a full company chapter.
Sleep apnea affects approximately 1 billion people globally, most undiagnosed. ResMed AirSense is the most widely prescribed CPAP line in more than 140 countries.
CEO Mick Farrell, son of the founder, has run ResMed since 2013. He expanded the company from devices into a connected care platform with software, data analytics, and remote monitoring.
Sleep apnea affects approximately 1 billion people globally, with most cases undiagnosed. ResMed's AirSense is the most widely prescribed CPAP device line in more than 140 countries.
CEO Mick Farrell, son of the founder, has run ResMed since 2013. He expanded the company from devices into a connected care platform with software, data analytics, and remote monitoring capabilities.
Cloud connectivity is a critical moat. Therapy data flows from AirSense devices to the cloud in real time, enabling physicians and sleep clinics to monitor adherence and intervene proactively from any location.
The MyAir app enrolls patients in digital adherence programs. With 89 million patients on platform, ResMed has built the world's largest sleep health dataset, a resource competitors simply cannot replicate.
The 2016 Brightree acquisition added home health agency management software. Matrix Care extended the platform into post-acute care, creating a software segment generating roughly 75% gross margins.
The 2022 Philips recall was a transformative competitive event. Philips recalled millions of devices due to foam degradation concerns, and a substantial portion of that lost market share transferred to ResMed.
Overall, gross margin runs around 58%, and operating margin near 28%. The mix of premium devices and high-margin software creates economics well above typical medical device companies.
The GLP-1 drug debate created a 2023 overhang. The concern if obesity rates decline, sleep apnea prevalence might fall. But management notes most sleep apnea patients are not primarily obese.
Device revenue growth runs around 12% annually, supported by new device launches, international market expansion, and conversion from older, non-connected devices to the current AirSense platform generation.
The recurring revenue model is key. Masks, filters, humidifier chambers, and accessories are replaced on regular schedules, creating predictable, high-margin aftermarket revenue alongside new device sales.
The dividend has grown for 11 consecutive years, from $1.40 annually to $2.04 today. Excess cash flow primarily funds product development and tuck-in software acquisitions rather than large payouts.
Competitively, Philips' recall damage created a significant opening that ResMed has capitalized on. Fisher & Paykel is the remaining meaningful device competitor in the premium CPAP and NIV segment globally.
For healthcare investors, ResMed combines dominant device market share, a growing software business, 89 million digitally engaged patients, and a condition affecting roughly 1 billion people with no cure. Brightree and Matrix Care serve over 4,000 home health agency clients, managing intake, billing, and compliance workflows, a recurring software revenue layer complementing the device business.
The international growth opportunity is substantial. Sleep apnea diagnosis rates in Asia, Latin America, and Africa are far below developed market levels, providing decades of runway for AirSense platform expansion. That's the company chapter for ResMed. Now that we've got the full picture, let's get into the earnings.
Time to dig into the numbers. Let's go.
ResMed just beat estimates again, and the stock is still nowhere near where it was before the GLP-1 scare hit. If you missed the recovery from 140 to 225, you might still have a window here. 33% free cash flow margins, CPAP device dominance, and a software segment quietly becoming the real growth engine. Let's get into it.
ResMed is a global medical device company headquartered in San Diego, California, with approximately 10,000 employees worldwide. It is the world's leading provider of cloud-connected devices for sleep apnea and other respiratory conditions, primarily CPAP and BiPAP devices, along with a growing software and services platform for home health management.
ResMed's revenue split has shifted significantly. Devices represent roughly 40% of revenue, while software and services, including SaaS platforms for home health agencies, and respiratory therapy providers make up the remaining 60%. That software segment is growing faster than devices and carries higher margins, making ResMed more of a health tech company than a pure device maker.
Q1 2026, which is Q3 of ResMed's fiscal year ending in June, produced EPS of $2.86 versus the $2.79 estimate, a 2.5% beat. Revenue was $1.42 billion, in line with consensus. The beat came from better-than-expected device volume and continued strength in the software segment.
On a trailing 12-month basis, revenue is $5.4 billion, up 9.6% year-over-year. Net income is $1.49 billion, an exceptional 27.6% net margin. ResMed is not a low-margin hardware company. It's a high-margin recurring revenue business with device hardware as the front door.
The balance sheet is genuinely impressive. Cash is $1.4 billion, debt is only $1 billion, and equity is $6.3 billion, with total assets of $8.5 billion. That near-zero net debt position gives management enormous flexibility for buybacks, acquisitions, and R&D investment, without the financial risk that burdens many medical device peers.
Free cash flow is the headline number. Operating cash flow on a TTM basis was $1.9 billion. After just $126 million in capital expenditures, free cash flow was $1.8 billion. That is a 33% free cash flow margin on revenue. Exceptional by any standard in any industry, let alone medical devices.
The stock trades around $225 with a market cap of $29.9 billion. The PE ratio is 19.7 times. For a company with 33% FCF margins, 9.6% revenue growth, and near zero debt, 19.7 times earnings looks like a reasonable entry point rather than an expensive valuation.
The dividend yield is 1.02%, modest but growing. ResMed's preferred form of capital return is through the compounding of the business itself, backed by share buybacks. With nearly $2 billion in annual free cash flow and minimal capex needs, the company has significant optionality in how it deploys capital over the next few years.
Street consensus on ResMed is bullish, with most analysts at buy or overweight. Price targets cluster in the $250 to $275 range. The thesis centers on GLP-1 fears proving overblown, continued market share leadership in CPAP devices, and the software segment becoming a more visible contributor to overall valuation.
The GLP-1 narrative reversal is the most important street development of the past 18 months for ResMed. In 2023, the fear was that GLP-1 drugs like Ozempic and Wegovy would cure obesity at scale, eliminating sleep apnea prevalence and CPAP demand. That fear drove the stock from over 300 to under 140. The data since then has not supported those fears.
Clinical evidence increasingly shows that weight loss from GLP-1 drugs does not eliminate sleep apnea in most patients. Many obese sleep apnea patients require CPAP, regardless of weight loss. And GLP-1 drugs may actually expand the addressable population for treatment by raising patient and physician awareness of sleep apnea as a chronic condition worth managing.
The software segment, primarily the Brightree and Matrix Care platforms for home health and respiratory therapy management, is the underappreciated growth driver. These are sticky SaaS platforms with high retention rates. As the home health sector grows and regulatory requirements increase for documentation and compliance, demand for these platforms expands.
Philips Respironics is the bear's remaining hope. Philips had a massive CPAP recall in 2021 that handed ResMed an enormous market share windfall. As Philips works through its remediation and potentially relaunches, there is some risk that ResMed gives back a portion of the share gains it captured during the recall period. Most analysts think the Philips recovery will be slow and partial.
The GLP-1 overhang is cleared. The stock fell 70% on a fear that didn't materialize. Now it's recovering, and there's still meaningful upside from the 225 level back toward 300 and beyond. Investors who avoided ResMed during the GLP-1 scare are still getting a better price than the pre-scare peak.
The device replacement cycle is a structural tailwind. CPAP devices need replacement every 5 to 7 years. The installed base ResMed built during the Philips recall years is now entering the replacement window. That creates a predictable volume wave of existing patients who need new devices, incremental volume with minimal customer acquisition cost.
Software segment growth is underappreciated in the current stock price. At 60% of revenue and growing faster than devices, the software platform provides stability, higher margins, and recurring subscription revenue that investors typically value at a meaningful premium to hardware. As software becomes a larger mix, the overall multiple should expand.
The Philips Respironics recovery is the primary competitive risk. Philips was the number 2 CPAP maker before the recall. If it successfully relaunches its device line with regulatory clearance, it can compete aggressively on price and win back hospital and clinic relationships that shifted to ResMed. Giving back even 15 to 20% of gained share would be a meaningful earnings headwind.
Insurance reimbursement for CPAP devices and supplies is a recurring risk. Medicare and private payers periodically adjust reimbursement rates for durable medical equipment. If CMS reduces CPAP reimbursement, either directly or through competitive bidding program changes, it compresses ResMed's effective revenue per device in the U.S. market.
GLP-1 drugs remain a long-term uncertainty, even if the near-term fear is resolved. If the next generation of GLP-1 treatments proves more effective at resolving sleep apnea permanently in a larger patient cohort, the addressable population for CPAP therapy could shrink over a multi-year horizon. That's a tail risk investors can't fully dismiss.
Valuation risk is also worth noting. At 20 times earnings with a 33% FCF margin, ResMed is priced for continued execution. Any quarterly stumble, a device shipment delay, a software platform outage, or a miss on international growth could cause a disproportionate stock reaction, given the expectations embedded in the current price.
Philips Healthcare is ResMed's most direct peer in the CPAP device space, though it's been sidelined by the recall. Philips is a much larger and more diversified conglomerate, making direct comparisons difficult. For ResMed investors, the key Philips watch item is the timeline and scope of any CPAP device relaunch.
Fisher & Paykel Healthcare is a New Zealand-based respiratory care company that competes with ResMed in some product categories, particularly hospital respiratory therapy. It's a high-quality company with excellent margins and consistent execution. Fisher & Paykel gives investors a sense of what a well-run, focused respiratory company deserves to trade at, typically a premium multiple.
Inspire Medical Systems is a niche peer in the sleep apnea space with its implantable hypoglossal nerve stimulator for patients who can't tolerate CPAP. Inspire targets a different patient population, severe sleep apnea patients who are CPAP intolerant, so it's more complementary than competitive. As awareness grows, Inspire and ResMed may both expand the overall treated population.
Against all device and health tech peers, ResMed's combination of market leadership, near-zero debt, 33% FCF margins, and 9% revenue growth puts it in a rare category. Very few medical device companies of this scale combine those attributes. The valuation at 20 times earnings reflects that quality, but is not obviously expensive relative to peers with weaker fundamentals.
Options activity on ResMed has normalized as the GLP-1 scare receded. Implied volatility has compressed from the elevated levels of 2023 and 2024, when every GLP-1 headline moved the stock sharply. Current options pricing reflects a more normal earnings-driven volatility profile. Quarterly moves of 5 to 8% are being priced rather than 15 to 20%.
Insider activity has been constructive. CEO Michael Farrell has spoken consistently about confidence in the business model and the GLP-1 narrative being overblown. Board members and senior management have maintained or added to their positions as the stock recovered. No significant insider selling has accompanied the recovery, a positive signal.
Institutional ownership reflects the shift in narrative. During the GLP-1 panic, some growth-oriented funds reduced positions. Many have been rebuilding exposure as the clinical evidence exonerates the long-term demand thesis. Healthcare-focused funds with sleep therapy expertise have been particularly active buyers in the 200 to 225 range.
The key catalyst watch is any new clinical data on GLP-1 drugs and sleep apnea. A study showing GLP-1 drugs dramatically reduce CPAP need would be a negative catalyst even in a positive recovery trend. Conversely, Data showing GLP-1 users still need CPAP therapy reinforces the bull case. Q2 device volume numbers are the near-term fundamental catalyst. Any acceleration in unit growth would be a positive surprise.
ResMed is a high-quality compounder recovering from an unjustified sell-off. The GLP-1 thesis proved wrong. The business performs strongly, and the software segment is becoming a more valuable component of the story. At 20 times earnings with exceptional cash generation, the risk-reward is favorable.
33% FCF margins and a clean balance sheet give management real optionality. This is a quality growth compounder in a defensive healthcare segment. The entry at 225 is still below the pre-scare peak. Add on any pullback toward 200.
Financial data and charts sourced from Financial Modeling Prep. Charged Alpha is for informational and educational purposes only. This is not investment advice. Always do your own research before making investment decisions. Thanks for listening to Charged Alpha. Subscribe and leave a review if this was useful. New episodes every earnings season. See you on the next one.
Ooh-wee-doo! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall Street swing.